Palantir is crashing, and your instinct is to buy the dip. Stop. Buying PLTR right now, simply because it is down 40%, is a liquidity donation. It is a retail trap. You are buying an arbitrary line on a chart, while institutional algorithms are hunting for capitulation. Step 1 is isolation. We must build the architectural watch list. We do not want cyclical hardware, and we refuse to risk capital on microcaps during a liquidity shock. We want the apex predators of the tech sector. We demand a market cap over $10 billion, a P/E over 50, combined with a PEG ratio under 1. And finally, the stock must be down at least 20% from its recent highs. The system isolates an elite list: Palantir, Broadcom, ServiceNow. But here is the structural trap. You do not buy yet. This is where the retail PEG illusion destroys capital. In a calm market, a 40% drop combined with a low PEG is a ghost. It is an illusion based on outdated estimates. If you buy now, you are stepping into a value trap. Step 2 is the execution trigger. Our elite watch list is locked. The only key that opens it is systemic capitulation. We do not care about company-specific news. We care about market mechanics. We monitor 2 explicit data points. First, the VIX must break above 30. Second, the fear and greed index must drop below 20. Why these specific levels? Because when the VIX spikes above 30, correlations go to 1. Portfolios break down, and funds are forced into margin calls. They are not selling Palantir or Broadcom because the fundamentals have changed. They are selling because they have to raise cash. Step 3 is the execution protocol. The macro trigger is flashing, and the market is in absolute panic. But we do not deploy our capital in one single strike, and we completely ignore traditional support lines. During systemic fear, retail support levels are designed to be broken. They are liquidity traps used by algorithms to force you out. Instead, we use a mechanical 2-part entry matrix. First, we demand momentum exhaustion. We wait for the RSI, the relative strength index, to crash below 30 on the daily chart. This is the mathematical signature of maximum capitulation. Selling pressure is structurally exhausted. Second, we initiate tranche execution. We never buy our full position at once. We scale in. We divide our capital into distinct fractions, systematically buying into the final waves of the sell-off. While we execute, our unallocated capital sits safely in a cash equivalent, like the SGOVETF, generating yield. We do not guess the bottom. We engineer our entry. This execution matrix is just one component of our architectural framework. If you are tired of operating on emotion and want to trade with institutional precision, you need a system. We do not gamble. We engineer risk. Subscribe to the channel to access our full suite of systemic trading protocols, and let me know in the comments which asset you want us to dismantle next. Stay disciplined. System over emotion.